Hi there, welcome to Grain TV. It's Thursday, June 9th. We had a down day in the markets ahead of USDA's crop report. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, corn gave up 4 cents a bushel, beans giving up 2, and wheat off 8.5, perfectly offsetting yesterday's 8.5 cent gain. News today was kind of mixed. There was some really positive news out of USDA in terms of another flash sales in terms of corn and beans in this case. New crop beans, 240,000 for China. On old crop corn, 116,000. In beans, that makes 500,000 metric tons this week that we've had in terms of flash sales. And we'll talk about that leading into a really good export number for beans here in a minute. But in other news, Brazil, their government forecasting agency lowered not only their corn crop, which was expected, but also lowered their bean crop estimate. Their bean crop estimate now stands at 95.6 million metric tons. USDA, on the other hand, is 99 even on beans, while corn, they came in at 76.2, and that is off nearly 5 million metric tons from USDA's latest forecast at 81. So look for tomorrow's crop report from USDA to show lower bean and corn production out of Brazil, which will help lower carryout in the world's supply and demand tables. Other news, Brazil, in light of the fact that they are running short of corn and poultry feeders down there are really struggling. They had an auction today for 500,000 metric tons of corn. That is a big drop, or going to lead to a big drop in their only 900,000 metric ton reserve that they have on hand. So they may be playing, so to speak, their last card in the deck. Let's take a look at weekly export sales and how they stacked up from USDA this morning. Corn knocking it out of expectations again, coming in at 1.5 million metric tons, well above 900 to 1,200,000 metric tons that was expected. In old crop, a little light, coming in at 120,000 metric tons, and beans 475 on old crop, pretty much at the high end of expectations, and new crop coming in at 758. And what again continues to be disappointing is the situation in wheat. Even with a new marketing year, we only saw 223,000 metric tons of business when we have 300 to 500,000 expected. So again, that is setting the stage for disappointing numbers in tomorrow's supply and demand report in the case of wheat, where we struggle with export competitiveness. Let's take a look at some of the weather that's going on right now. We have that being a key driver. Certainly traders are looking to the forecast in the next 2 weeks to be sort of hot and dry, especially in the Midwest. Let's look first of all from the University of Nebraska, their drought monitor that comes out every Thursday. That's going to be a prime thing that we need to watch during this growing season. And we can look at, on the left, last week's reading from University of Nebraska, and on the right, this week's reading. They don't look terribly different. Obviously, there's a little bit of hotter spots, or drier spots, if you will. The Iowa spot in particular is starting to get bigger, and as we look into the eastern Corn Belt, we see parts of Ohio, parts of Indiana, and Michigan showing up on the drought monitor versus last week where they were not. And of course, the real issue is what is going to be the weather in the next few weeks as we get into the mid to late part of June. And as we look to the Climate Prediction Center, we see a chance of dry precipitation in the major parts of the Corn Belt in this 8 to 14 day forecast. That puts us into mid-June out to the third week of June, June 22nd. So this is the forecast the Climate Prediction Center is saying, where we're going to see below average precipitation in Iowa, in the northern parts of the Corn Belt for much of that 8 to 14 day period. So that, in some sense, is what the market is trading right now. And obviously we took a break today as we wait for further direction from USDA in tomorrow's report. And as we've been reporting on Grain TV, we expect to see lighter stocks for corn, lighter stocks for beans, not only in old crop but in new crop, and more stocks in the case of wheat. Wheat, obviously, we had a disappointing end to the export year for old crop wheat. That's going to translate into more carryout into old crop, into new crop, and we're also expecting USDA to bump up their winter wheat production forecast, where they did a survey of farmers as of June 1. So that's what we're looking for tomorrow. Again, that report is 11 a.m. Central Time. If you'd like to follow us online and hear what we're reporting and talking about as the market trades, go to grainedge.com and sign up for our live stream. We'll be talking and reporting and watching the market as the news comes out at 11 o'clock Central Time. Again, grainedge.com, you can sign up and get a link to our free live stream as we're seeing what happens as a result of that report. As always, if you have any questions or want to visit us online, visit us at grainedge.com. We'll see you tomorrow to talk about the USDA crop report. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainedge.com to become a client.